Investing in stocks can be a great way to build wealth over time, but it can also be overwhelming with so many different options to choose from. One option that many investors turn to is blue chip stocks. In this article, we'll discuss what blue chip stocks are, the advantages of investing in them, and some things to consider before making your investment. What are blue chip stocks? Blue chip stocks are shares of large, well-established companies that have a long history of stable earnings, reliable dividends, and a solid reputation within the industry. These companies are leaders in their respective industries, and their stocks are generally considered to be less risky than those of smaller, less established companies. Blue chip stocks are often included in major stock market indexes, such as the S&P 500 or the Dow Jones Industrial Average. Advantages of investing in blue chip stocks. Stability. One of the main advantages of investing in blue chip stocks is the stability they offer. These companies have a long track record of stable earnings and reliable dividends, which can provide a sense of security for investors. They also tend to weather economic downturns better than smaller companies, which can be especially important for investors who are looking for a long-term growth. Lower risk. Blue chip stocks are generally considered to be lower risk than other types of stocks. Because they are well-established companies with a long track record of success, there is less risk of bankruptcy or other financial problems. Additionally, they are often less volatile than smaller companies, which can make them a good choice for investors who are looking for less risky investment options. Regular dividends. Many blue chip stocks pay regular dividends, which can provide investors with a steady stream of income. These dividends are often paid out quarterly or annually and can be a reliable source of passive income for investors. Potential for growth. While blue chip stocks are often considered to be stable and lower risk, they can still offer the potential for growth over the long term. Because they are leaders in their respective industries, they are often well positioned to take advantage of new opportunities and innovations, which can help to drive growth in the stock price. Things to consider. Valuation. While blue chip stocks are generally considered to be less risky, they can still be overvalued at times. It's important to do your research and make sure that you are not overpaying for a stock simply because it is a blue chip stock. Look at the price-to-earnings ratio and other valuation metrics to ensure that the stock is trading at a reasonable price. Diversification. While blue chip stocks can be a good investment option, it's important to remember the importance of diversification. Don't put all of your eggs in one basket, and make sure that you have a mix of blue chip stocks, other types of stocks, and other investment options. Past performance. While past performance is not always an indicator of future results, it can be helpful to look at a company's history before investing. Look at the company's financial statements, earnings history, and other metrics to get a sense of how it has performed in the past and how it may perform in the future. Investing in blue chip stocks can be a great way to build wealth over time. With their stability, reliability, and potential for growth, they offer many advantages for investors. However, it's important to do your research and consider the potential risks and rewards before making your investment. Risks and rewards.